What is going on? It's Billy here from Storm Trades with another trade recap. Today we're going to run through my gold futures long trade. It was a reversal that I took for about a 1.8R win on Tuesday, August 12th during the New York AM trading session. Let's get right into it. On the chart right now is the last four daily candles. So we are looking at the daily chart. I'm going to mark up the daily chart the same way every single time, trying to make this process as simple as possible. Previous daily low, previous daily high. Let's run a fib from the previous daily candle. And we're looking for a narrative that that makes sense in the coming from the standpoint that price typically books from internal range liquidity to external and vice versa. So do we have any external range liquidity, or most recently have we been delivering from some sort of internal range liquidity, so some sort of an imbalance? In fact, we have, right? So we just recently swept this this daily swing high, and we have formed a reversal from there, right? So we have a swing point we have created. Okay, this is a really nice C2, right? This is the C2 candle sweep. All right. So this was Friday's candle, right? And Monday was a strong continuation move, right? So we marked that off. This is a very strong bearish candle. Now, do we have any internal range liquidity to reach for? Well, we do. We're actually already inside of it. So we are inside of a bullish daily fair value gap. However, whenever we have a strong candle like this, and we have clearly made a swing after taking a very significant high-level form of liquidity, I typically see price move lower into this internal range liquidity. So even though we were, from the standpoint of candle structure, we most recently delivering from some sort of external range liquidity, I was bearish. If I'm just using the fact that we're inside a daily bullish fair value gap, technically I should be bullish there. However, my data will show that when we have a strong move like this and a clear swing point, we'll typically want to go at least to the midpoint of this daily fair value gap. And that was my logic when looking at the daily bias for this particular day. Now, I just want to make note, right? We mark out the 50% of the previous daily's range, and that's important here because if we are in fact going to move lower, then we would expect the open high, right, the wick to form within this this lower quadrant, and then the low close to happen at some sort of target, which I'm targeting the midpoint of the bullish daily fair value gap. Now, just because I am bearish, okay, I am bearish, but with it's like an if-then, right? Once we hit the midpoint of this bullish daily fair value gap, I'm no longer bearish. In fact, that's where I did start hunting for a some sort of a reversal signature. Okay, so I'm going to pull in the hourly market structure time frame here and just sort of see, does this make sense, right? So Friday we had a smart money reversal. Okay, if we're looking at this in terms of like a market maker sell model, right? We had the smart money reversal up here. Okay, change in the state of delivery, and then we've been moving lower to a logical final target. For me, it would be the midpoint of this daily fair value gap. Now, as we go a little further, we will see that there was other signs that showed us we were in fact, that was a good target to seek out. Now, you guys know that I've been using the 1/3 ADR as a draw on liquidity and also as somewhere to hunt for reversals. So as I'm analyzing the charts, I'm noticing we have a 1/3 ADR, and look at where it is. Okay, just so happens to be almost exactly at the midpoint of this daily bullish fair value gap. So I'm already sort of doing an if-then, right? I missed a trade that, well, it wasn't really a trade, but there is going to be a move down into this. So theoretically, I could have gotten involved pre 9 a.m. Okay, on some sort of a short, but I did not. I just wanted to watch GC, okay, and just see what was going to happen. I just like the idea of taking some sort of a trade out of this bullish daily fair value gap. I'm going to move price forward an hour here, and this is where we actually tagged the 1/3 ADR, okay, and so I was looking at that, right? I was interested in that. I also tagged the midpoint. So if we're going to continue lower, we're going to start closing below this midpoint and get all the way down here. If we're going to reverse here, then we would form a wick and we would move away fairly quickly. Now, one of my requirements to go down to the M5 time frame is a sweep of some sort of hourly swing low in this case, or a sweep of a swing low into an imbalance, right? So we actually have an hourly sweep right here, and we have a large, unmitigated bullish hourly fair value gap right here, okay? Now, in this particular scenario, I would not want to see price come all the way down to the midpoint. If we were going to make a V-shaped recovery, right, V-shaped reversal here, and start seeking out the other side of this 1/3 ADR, then we would not want to see price come all the way down here, right? Because that would mean that we're moving and starting to close on the hourly below the midpoint of this daily fair value gap. So all of this sort of has to make sense, right? Especially if we're gonna trade reversals, it's got to make sense. So one of the requirements I have is it's already been met. Swept an hour swing point. We actually also swept into a bullish hourly fair value gap. So I am now hunting for reversals, and I will be looking for a sweep and some sort of a change in the state of delivery on the M5 time frame. So let's go down to the M5, and as you can see here, we have a sweep. I'm just going to move this over. Okay, this is the hourly fair value gap that we are currently in, right? And I'm just going to move that over here. Now we have had a move down, swept this swing low, right? We've already established that this happened at the 1/3 ADR. This is how I watch price. So I notice there's a big fair value gap right here. Okay, so I marked that out. Okay, now I marked that out as a potential inversion fair value gap. It's not yet. If we're going to move lower, then we're going to respect this fair value gap and we're going to go lower, right? If we're headed lower, then we're going to respect this fair value gap. If we're potentially going higher, we're going to disrespect it and we're going to invert it. And if we inverted it, we also would have a change in state of delivery right here, right? So we're not there yet. We don't have a trade yet. And something I just wanted to make note, I just put up here, is we still haven't taken the Asia high, right? So Asia high is always a very good form of a liquidity pool. So if we don't respect this, right, and we in fact disrespect it, close above the fair value gap, close above the change in state of delivery, I am interested in a reversal long, and that's exactly what we got. So let me move price forward here. And on the very next candle, we had a nice candle close, okay? I'm going to mark it in when we're this close to the change in state of delivery. Stop loss below the, this is a large inversion fair value gap, stop loss just below that, and a target up here at the Asia high. I'm going to go ahead and put in a buy order here, okay? I market it into this one. Stop loss below the inversion fair value gap, take profit right at the Asia high. Right now we have the 1/3 ADR up here, but I don't need to hit the 1/3 ADR. I just need to frame a trade from right here. We reversed it from here, and now I know that we have a lot of room to go. So do we have plenty of room to reach the Asia high? Absolutely. All right, so let me move the price forward here, and boom, right? And you can see my trade right here. This was inside Unicorn University. All right, and that was it. So if you guys like this at all, if you get anything out of my videos, I really appreciate anybody who watches these things. Doing these really helps me. I hope to help you as well. My suggestion is that everybody should be journaling, going back and looking at their trades, looking at the trades they lost, documenting everything. You learn so much from doing this. It's been incredible. So please like, subscribe, and drop any comments. I love the comments. So if you guys have a great day, and have a good one.